This CKNW podcast is brought to you by Destination Toyota in Burnaby, BC's #1 Toyota dealer for the sales purchase experience.
I'm glad you're with us. There's so much coming your way. I was just going to say I hesitated there because I've got about 19 things on my plate today. Again, if you have just joined us, we have a great shocking stat of the week. I've got a great Goofy Award for you. I've got Victor, I've got Ozzy, but right now, very pleased to welcome back to the show a man who has won so many awards. I don't have time to go into them right now, but I know him as the Long-Term Timers Digest Timer of the Year, and I know him as the Gold Market Timer of the Year and the Market Timer of the Year, Mark Leibovit, vrtrader.com. Mark, appreciate you finding time for us on the weekend, but a great time to be chatting with you. Well, I was going to say it's a great time to be chatting with you because, I mean, we had the Federal Reserve come out about 10 days ago and really throw sort of a monkey wrench into what the markets are doing. Let me ask you just very quickly, when a big event like that happens, I guess that's what your analysis is taking into account. That's why people like technical analysis and you use your own proprietary trading indicators. Did it make a big difference to you in how you looked at the markets?
You know, in truth, I guess we're focusing on interest rates in the bond market here. We actually start to see some accumulation in the bonds pointing to higher prices and lower interest rates, a couple of weeks before the Fed decision not to taper. So sort of interesting that I think the smart money realized that, you know, we weren't going to see a continued rise in rates and we might go the other way, which is frankly the way that market looks to me right now, which is sort of contrary to what everybody's thinking. I think you're going to see, you know, maybe just a near-term, the short-term comment, but we're actually looking, you know, on the buy side, on the bond market here from a trading perspective. And like I say, it could be a 1-month play, 3-month play. Maybe it's a bigger turn. We don't realize that, but right now we're positive on the bond. So then we start to see the accumulation come in around the 26th, 27th of August, which is really interesting. And the bonds really bottomed. This is August 22nd. So we've been trending up since then in the bond market. Again, rates ticking down during that period. So the technicals were warning way ahead of time, Mike, to answer your question.
Well, this is a key point, obviously, for people who are interested in interest rates. I mean, whether then it translate, I mean, what they do in the bond market translate into what people are going to pay for their mortgages and many other lending rates, of course. So let me come to this. I kind of was looking at the charts this week and looking at that 30-year U.S. bond, and it looked to me like it was breaking its downtrend line, meaning, again, for people, that means it was breaking the down, you know, when the bond goes down, interest rates go up. So this breaking of the downtrend line is telling me that rates are going lower. Is it the same thing?
Yeah. It's counterintuitive to what's going on out there, right? It figures that's the way the markets are. So maybe it means the bond market is anticipating much more aggressive Fed stimulation, which a lot of smart people out there say is probably the case. Instead of tapering at $85 billion, Bernanke may have to go to $100 billion because things really haven't changed. Unemployment is about the same. The velocity of money hasn't really increased. All these various fundamental reasons that there hasn't really been an impact. GDP has been, you know, pretty stable. Hasn't really increased the way they anticipated. So yes, there may be more aggressive stimulation coming on the part of the Fed. Maybe that's what the bond market is telling us. So it also could be a defensive play, perhaps. Smart players are thinking the equity markets need to correct here a little bit more, which was my thinking, that we need a little bit more of a correction here. Not necessarily a bear market yet. I'm not in that camp yet, but more of a correction. So bonds might be perhaps forecasting that as well. So anyway, I'm a buyer of the bonds here on a trading basis, and sometimes trades become more near-term plays. We'll just, as we always do, take it a day at a time, you know.
Let me just ask, Mark, so you haven't seen, though, like I was calling that May action a bottom in interest rates and a top in the bond market. Have you seen anything that reverses that, or you're still sort of on tenterhooks watching to see if there is a confirmation that we actually are going to go lower in rates, if you know what I mean? Like something significant, I'm asking, not on the trading basis.
Right. I think you've seen the big high in the bond market, you know, from way back. I mean, this could be just a technical, you know, recovery in the bond market and a pullback in rates here. So I'm not saying that we're going to see, new highs in the bonds, that type of thing. You know, this could just be a bounce after a big downtrend. So what we're saying is, you know, rates bottomed back earlier in the year, they started to uptick for a while, and people thought that the big turn has come and rates are just going to the moon and mortgages are going to go higher indefinitely, all that kind of thing. And that may not be the case here. It just may be a bounce for a while. So we're just going to have to watch it. I mean, I guess there's that case, which would surprise everybody, that rates actually go to new lows. Things are really that bad out there economically, and the Fed gets that aggressive, and it completely shocks everybody. But those bond highs are so far from where we are right now, it's a little difficult to think we're going to go blasting through those. So I think it's more of a bounce. That's the way I'm looking at it, and we'll just fine-tune it as we go forward.
Great stuff. I don't want to get into too many things here just before we have to take a break, so I'm going to pick a smaller subject because I will take a break in a moment with Mark Leibovit of vrtrader.com. I'll ask him to come and reiterate on the stock market. I'll ask him to come to precious metals with me. But Mark, let me just throw out both the Canadian dollar, U.S. dollar at this point.
Canadian dollar's looking good. I have a technical signal I call the volume reversal, and that's flashed here back on September 4th and again on September 16th. If you look at a big chart on it for last year, yes, we're in a downtrend, and we haven't broken that big downtrend line that you referred to with the bonds yet to say, this is the beginning of a major move yet, but volume is starting to come in to the upside. So I would say if Canadian dollar can get above that 97.50 area and stay there, we may have seen a bigger bottom here for a while, maybe at least into the end of the year. So I'm not trading it per se, but that's telling me he's going higher. And at the same time, the U.S. dollar has got negative volume in here. And I think taking a 3-month or so comment, I think it could possibly break that 80.50 area and maybe get into the mid-70s. So I'm constructive on the Canadian dollar, but negative on the U.S. dollar here, just looking at the volume patterns.
One of the things I love about Mark's service, and Mark does a daily comment, or twice daily actually, and it can be and much more when he takes action in the market. He lets you know, and you can find that at www.vrtrader.com. One of the things I love about your service, though, is you said, look, I'm bullish, I'm bearish, or you can say I'm standing aside this market, which I wish more analysts would do. There are lots of times when the signals don't line up and the probability isn't there in one direction or another. And I don't, as I've always really appreciated that about what your work is. And one of the areas that is right now is you're looking at crude oil and you're saying, I'm standing aside of this market right now.
Yeah, crude oil is very difficult for me here, Mike. There's conflicting signals. I can give you all kinds of, parameters. If it takes out, the 112 high, we can go to 116, 120, and if we take out 102, it could be back down to the 90. So the most recent pattern has been a little negative here. It's trending down, but except for maybe a quick trade for a day or two, based on a very short-term signal, I just don't have a great deal of conviction with it. I guess if you push me to the wall, I still think we're in a deflationary environment. And that's one of the reasons why rates probably stay down for a while, and that's probably why we've seen, negative price action in the commodities, including the precious metals and stuff. So in that sense, if the deflationary environment's what I think, that should put a little bit on the crude oil market, with the variable, of course, with the Mideast and all those kind of things changing day to day. But, again, being pushed to the wall, I might think that we would go lower rather than dramatically higher. But no real aggressive trade here. And again, as you said, I'm standing aside for now until it really clears up.
I'm talking with Mark Leibovit, vrtrader.com, the letters, vrtrader.com. Mark has been Timer's Digest Gold Market Timer of the Year also, and that's where I'll start when I come back. Also been Stock Market Timer of the Year and Stock Market Timer of the Decade. So I'll come and I'll talk also about what's going on in the overall markets. I'll take a break. I'll come back. Much more planned for you today. I'm glad you're with us right here across the Chorus Radio Network. A reminder, one of the subjects, I was just looking it up here in the break, that I started talking about 3D printing in 2011. And I can't think of a subject that is less on the radar that you should be aware of. I rarely say that. You have to understand 3D printing. And so go to moneytalks.net. There's a couple of things on there. If you don't know anything about it, you haven't seen a demo of it, go to there. You can click right on it, and there's a wonderful video there that actually shows it in action. It looks like something out of the Jetsons if you're old like me, or Star Trek if you're a little younger. But here, if you know about 3D printing, scroll down a little bit, and there's a wonderful there's a wonderful TED Talk on 3D printing and where it's going, and it's called "Why Do I Own a 3D Printer?" there, and there's still one more article there, and it talks about breaking news on 3D printing, because there's so much there that you should know about. But as I say, go down to David Flanders if you know about that, the miracle 3D printing, what you need to know. Anyways, go ahead and do that on moneytalks.net. Also, Rob Levy's latest article is on there. Join me on the line right now. I've got Mark Leibovit, and one of the things I do in the gold market is I look forward to, on a weekly basis, the VR Gold Letter, the Leibovit VR Gold Letter. Great stuff in there on gold, precious metals, not just Mark's opinion. He outlines stocks specifically, what he's doing there, silver market, precious metals in general, palladium and platinum also involved in that. Excellent thing. You can find out more about that at vrtrader.com. Mark, I'm looking at the gold market right now, and I thought I'd just start by asking you, there's a seasonal pattern that's been pretty good as one of the indicators, and maybe you could just share with us what's the seasonality aspect of gold right now.
Well, we tend to, a very general statement, we tend to bottom in the summer months, and we tend to rally up, to zigzag our way up into early the following year, let's call it February. That would be the general pattern. And, sometimes there's a shake in October along with the equity markets if there's an October event. But, the general seasonal pattern tends to be up, going forward here. So, it doesn't mean we're going to see a dramatic move, but, that's what the cycles say. So that's one piece of the puzzle, of course.
Do you find that there's pressure on you as an analyst to be bullish of gold?
That's an interesting question. I guess maybe in a certain sense, because so many people, have got, for lack of another word, caught in the gold market, and they're trying to rationalize their position because it obviously has been in the downtrend for the last couple of years. But, I try to be as objective as I can, and I think some of the comments that I put in my newsletter and stuff, talk about the downside and what the risks are, and we have occasionally traded the short side. But there's such a compelling long-term fundamental reason to own it. I guess that I'd have to answer it affirmative, because again, there's so many things that are wrong out there, and we see so many smart people, smart countries like Russia and China, accumulating the darn thing, that you just feel like this is a bigger trend, and at some point there will be a big turn, and you want to keep at least your foot in the door. So I guess I'm a little more biased to the upside, but you got to follow it. Technicals and trade it accordingly. You don't want to get in too early. You don't want to catch that falling knife if you're trading. Of course, if you're investing, you got the coins in the vault for the last 10 years. All these comments are irrelevant.
Let's talk about short term, and again, I'm underlying that with Mark. What are your numbers short term? I mean, at what point, what does gold have to sort of get above to sort of signal to you we're now entering sort of that next leg up? Or what does it have to drop below to signal the next leg down?
Okay, well, we have some recent numbers. My breakout point's a little higher than most. It's around that 1375 level, and I think that's important. That's just a high we saw back on the 19th of the month here. So if we can take that out after shaking down towards support 1300, I think that's a good short-term sign. If the dollar remains weak, which I think is a good shot here. Over the next, couple, 3 months, I think that should be positive for it. We haven't really broken out big time. If you want the big number, I mean, that's the 1432 from August 28th. You take that out, then I really think you're cooking with gas here, as I say. Then you're going to probably have a shot up to that 1500 plus. I mean, on a trading basis, I'm long the gold here. I mean, in the newsletter, we're long GDX, GDXJ, the miners, and here with the appropriate stops, thinking we could trade higher. Whether we're going to take out these numbers or not, time will tell. And if we're wrong, we're stopped out. And my bias is because sentiment is so negative here, and we hit some support in the 1300 area. Some of the internal readings that I see show a bit of an uptrend unfolding here. And the fundamental case that about inflation and everything, just doesn't sit with me. I think it's pretty much a currency play, as you and I have talked about for years. Mm-hmm. I think that's really it. I mean, if the dollar is going to continue down, which I believe is the case, then I think, that's one of the reasons you should be in the precious metal. So I'm bullish short term with appropriate stops. And as far as the downside, well, if we start taking out that 1275, 1300 area, Mike, I guess we got risk of testing those lows down there at 1180. So from a practical point of view, that is the risk.
But as you say, Mark, it's the numbers that will dictate your action. It's just something I want to emphasize with people. And I think we've done a good job on Money Talks talking about how, whether it's the stock market or gold, et cetera, they trade in a range. So we should be very aware of those ranges. If it breaks the lower end, as you say, Mark, that 1275, it's going, the next level below could see that old low of 1180-ish. But we have to break above, the major one you said, 1432, to get some real cooking with gas going there. Mark, let me just throw quickly. Oh, sorry.
No, I say my letter this week was titled "Burden of Proof is on the Bulls," so that's the bottom line here.
Let me ask you silver quickly.
Well, silver, has got that big support down there at the low at 18, and I have to tell you that I'm very disappointed in the action of silver. Volume just didn't come into the upside like I was hoping, but the big breakout number there is well above the market, Mike. It's around 25.07, and your big number under the market would be first 21.20, and then that 18 low that we saw. But if I was looking at the silver market just by itself and I wasn't influenced by gold, inflation, or anything else, I would say this puppy is still in the downtrend, and we're going to get a technical rally, and you could see silver under 18, in the months or years ahead. I'm not super excited about it just yet. I need more confirmation. So either there's manipulation going on, or it's just not what everybody thinks it is in terms of the speculative play quite yet. So if you push me to the wall on this one, I wouldn't be surprised if you saw silver at $15 in the next year or two until I see something that tells me something differently. Again, this is, maybe this applies more to the gold than I'm willing to admit at the moment, but it just doesn't really excite me. But if 18 is your big number, 21.20, a little bit above that in terms of support in your 25 level, and if it starts taking out water both, certainly I'm not going to miss a big move at one starting, but that's where I'm at. So I'm not really that excited about playing the silver market long here at all.
I'm going to I got to take a break here. I'm talking with Mark Leibovit, and you can go to www.vrtrader.com. As I say, I love the gold letter, and it talks silver, of course, and other precious metals, but also gives a whole bunch of tidbits about what's going on in that world. For example, China purchased 8.8 million ounces. That's 275 tons. More than last year. I just find that interesting. What's India doing? What's the demand side of that? So that's vrtrader.com, and you can get the VR Gold letter also. He's been Timers Digest Timer of the Year and Long-Term Timer of the Year, so I'll come back and I'll ask him specifically about what's going on in the stock market. We'll be quick with that. I've got my shocking stat of the week. In the interim, remember, especially if you're listening from the Calgary area, I will be there on October 27th. October 27th coming. That's a Sunday. We're doing an afternoon event there. I hope you put it down in your calendar or make time to join us. And one more thing, remember to go to moneytalks.net and you can sign up for What Mike's Reading. This is a free service that I do. I read a ton of stuff during the week, and I mean literally hundreds of analysts and columns. If I see something that I think you should be aware of, I send it out to you absolutely free, just like I think you should be aware of 3D printing. That's also on moneytalks.net. Take a break. Back with Mark Leibovit. Coming up, my shocking stat of the week. This is a beauty. I've got Aussie Jurek on deck also, and I've got Victor Adair, so lots coming your way. Right now, Mark Leibovit joins me for the last couple of minutes here. You can find Mark at vrtrader.com. Hey, Mark, I just wanted to get to the stock market. You alluded to it earlier. What's your thoughts?
Okay, well, very short term, I'm a little bearish here. I think, we could see a little bit more of a correction, but I don't think the bull market is over yet. I think they're going to still try to take it higher. There's a theoretical projection in the S&P up to about 1,800 or so, and even the Canadian market, the TSX, looks higher to me. I think they trade well over 13,000, maybe up to 13,003. This could be a 6-month comment as well. I think the trend is still there, and what we're experiencing is the September-October indigestion, which by coincidence is suddenly tied to the debt crisis in the U.S. and the Obamacare issue all coming in at this time. So the short-term signal is a little negative here, and I was sort of hoping for more of a correction, maybe even a nice shake down 10% or something like that. I don't know if we're going to get it or not, so we're monitoring it day to day. But I think you're going to see either that year-end rally or that rally into early next year, and more likely into new highs. My overall view is that we're probably going to see a big top, either later this year or into early 2014. And of course, that's all subject to technicals, but based on big picture cyclicals and so forth, I could see us entering a possible 1 or 2 year bear market later. And I don't think we're quite at that point yet, but for new investors coming in here, I think you got to be, pretty aggressive. Let's say you get lucky and there's a 10% correction here into the end of October. Jump in, get out either the end of the year or early next year. I wouldn't wear my welcome, because I think, we're getting awfully high, and the bull market's been going on for just too darn long. So that's over my overall strategy. But short here, just thinking a little bit more of a pullback, maybe more of a pullback. And I'm going to move quickly if my theory doesn't work out and suddenly they reverse this market higher, because, again, we're sort of fighting the trend. If you look at the big trend stuff, it just hasn't turned down in a big way yet. It's just, correcting. And, again, maybe it'll be a little more nasty correction, which I like to see. And that, just from a trading perspective, would make us money on the short side and provide a nice long entry opportunity for the year-end, early next year rally. So that's where we're at.
Great stuff as always, Mark. And by the way, we're negotiating with Mark right now to join us at the World Outlook Conference. But in the meantime, you need his updates. He does it, as I say, numerous times, opening market, closing market, but anything he does in between, he lets you know. And you can get that at vrtrader.com, vrtrader.com. Mark, thanks for taking the time.
Anytime, Mike. Thank you.
Time now for this week's shocking stat of the week. I was thinking back. The year is 1973. My first handheld cell phone sold for $3,995. It was Motorola. It weighed 2 pounds, and it was nicknamed the Brick. Thank goodness I was younger so I could carry it. I want to flash forward to right now. Do you know that cell phones are 60% of the overall tech marketplace that way? Portable computers are 17%. Tablets, 11%. Cell phones or smartphones, 60%. Okay, here's a killer. Cell phones are more common than toilets in the world. There are 6 billion cell phones in the world as of the end of 2012, 4.5 billion toilets. Do you think that's success? That brings me to my shocking stats for the iPhone. Last week, people were talking about how it sold 9 million units in the first 3 days of their new iPhone 5s. Well, its revenue last year, if it was its own company, nothing to do with the rest of Apple. In fact, iPhones outsold all other Apple products combined last year, 88.4 billion. But here's the shocker. That if iPhone was its own company, nothing else with Apple, it would be the 9th biggest company on the Dow Jones. But it would have outsold these names. McDonald's. Did you know that? Bigger sales of iPhones than McDonald's, then of Google, then of Nike, then of Coca-Cola, Boeing, Procter & Gamble. I was just blown away when they put it in that perspective. Obviously, they're successful, but did you know that? Outselling Nike last year, Coca-Cola, McDonald's. Wow. That's my shocking set of stats for the week. I'll take a break, come back. Aussie Jurek, I got Victor Adair, and I got a goofy that's bound to tick a lot of people off, so stay with us. I'm going to, by the way, I'll be in Calgary October 27th talking about currencies, how to make money. All sorts of really good things happening with Jack Crooks. Black Swan Trading had a terrific track record this year. Man, he's made some dough. Victor Adair is going to be with me on that, plus a raft of other speakers. This is something that I think you want to make, if you're in the Calgary area, mark it down on the calendar. I want to see you. And by the way, once you buy a ticket to that, you automatically, right away, will get access to the paid blog on moneytalks.net. And I'll tell you, we've done a good job on that. Writing about once a week, or sometimes it's about 5 times a week, depending on what the markets are doing, about how to make sense of the markets, what you could be doing in that market. And speaking of making money, I'll tell you, I'm very pleased with, you think about the 2 major suggestions we've made on this show with Aussie Jurek regarding real estate. One would be to get into the Phoenix market. It was the number 1 recommendation over 2 years ago at the World Outlook Conference. Then Vegas was added on about a year and a half ago. Man, have those done well. But the other one that I've loved, and we've been talking about this, gosh, it might be 4 or 5 years, about farmland in Canada, and as a way of playing the agricultural boom. It was a way also of playing the China card there. Aussie Jurek joins me on the line now. Aussie, I just wanted to come to farmland. Don't want to throw it out of left field for you, but I looking at the farmland numbers, they've done great. I mean, maybe you could express to us, how do they do just in the last 2 years, for example?
Well, Farm Credit Canada reports that the average value increased about 8.6% right across the board, and that's in the first half of 2012, and that's following increases of 7 and 7.5% of the previous two periods. And if you look at places like Alberta, for instance, land rose 10% during the second half of 2012 as well.
Which province? You just mentioned Alberta. I mean, it's expensive there, at least some of the stuff I've seen and I've read on Jurek.com. Which province has seen the biggest price increases lately?
You know, Mike, surprisingly, it was Ontario. In 2012, they increased by 16.3%, followed by Manitoba at 10.3% and Saskatchewan at 9%. And this year, in 2013, so far, the biggest upswings are noted in Saskatchewan and Alberta.
I mean, give me just a couple of examples here so I get an idea.
Well, it's got, of course, some of the towns that are close to oil fields, or some of the towns in Alberta where Alberta has no controls on selling agricultural land for development, unlike Ontario and also Saskatchewan. But those have seen some spectacular increases. But to give you an idea, the small towns of Barons, Alberta, had some 2,080 acres listed at some 9 million 6 years ago. Now it's 13 million. And near Lethbridge, a 96-acre parcel with some business potential went for 13,000 acres. So there's some real price increases just in the general marketplace.
What are you looking for then? I mean, why these increases, and what am I looking for if I was going to buy some?
Well, this is the key, and I think you alluded to that we talked at length about one of the reasons that farmland prices are rising. Of course, the cost of production is going up. Everything that you and I buy, food, beef, everything that's grown on a farm is rising in cost. But one of the reasons is that syndicates are buying up land in sort of a buy, lease, sell strategy. They'll buy the land, lease it back to the farmers. And I think you and I talked, I think it was as much as 5 years ago, that some of these concerns were making 6% returns on the land, number one, just in terms of cash crops. And number two, they saw these price increases. But also end users, established operators are expanding existing operations. And in fact, RE/MAX just did a study saying that a lot of the expansion is right where the farmers are adding more land to their existing operations.
Well, this leads right into hot properties, because I want something in farming here, Ozzy. How about some hot properties?
Well, RE/MAX said that cash cropping land continues to the most sought after. So we looked at some in Grenfell, Saskatchewan, 637 acres, grain farm price $1.2 million. Then in Wakar, Saskatchewan, farmland 320 acres, $279,000. And then the lowest one we found was Preeceville, Preece, Ville, Saskatchewan, and it's a livestock acreage, 320 acres, and it's $180,000. So, hey, even I could be a gentleman farmer.
I was just going to say, or you could buy a bathroom in Yaletown in downtown Vancouver for that kind of money. Ozzy, this is a great subject, though, and seriously, you deserve a pat in the back for sort of ringing the bell on this one for a number of years when it wasn't very obvious, and it wasn't people looked at you and said, man, that guy's got a German accent, he wears lederhosen, and he can't golf, and he's talking about farmland in Saskatchewan. But man, has that ever worked out? They can get more if they go. What's that?
You're always zapping me about golf, but I figured out, I'm in Kimberley right now playing at the beautiful Kimberley golf course, and I remember Jack Lemmon said, if you think it's hard to meet new people, try picking up the wrong golf ball. And I met so many excited people last week. It was great.
I bet you did. Just go to www.jurek.com, though, and you can look at more on this stuff here, because as I say, I still think there's a lot of opportunity in the agricultural sector. This is one way to play it. Ozzy Jurek, Jurek.com. I'll take a break, come back. Victor Adair and a goofy that's bound to make me less popular than I am today. Coming up, my Goofy Award, but right now I've got Victor Adair on the line. Victor, this time last week we were talking about the Federal Reserve action. That there's no tapering, as it were. They're going to keep pumping the money in there. The Fed did surprise people. There was a lot of sharp price movement there. I mean, man, we watched the stocks, the commodities rise, then they gave it all back. The one area that didn't give it back, by the way, was the bond market, looking for lower rates. As Mark Leibovit said, at least on the short term, that's what it's saying. Okay, so here's the big deal. You were saying last week you thought it was overdone once the announcement came. so you went opposite a lot of those markets and did well with those. Looking maybe it was a key turning date. So I want to get to this week and ask you about a whole bunch of different areas. Let's look at where the markets are now and start with gold for me.
Well, the gold market jumped when the Fed did not announce a taper. And then from the highs that it made on the Thursday following the Fed announcement, gold dropped as much as $70 to this week's lows and closed about $40 lower yesterday. So gold really backed up, after the surprise jump higher, and it down on the week.
Well, similar to the markets too, the stock market.
Yeah, if you look at the Dow Jones, for instance, the Dow dropped as much as 500 points from the highs that it made Thursday of last week. That would be the 19th of September. And it's closed about 450 points down, or just short of 3% from the all-time highs that it made the day after the Fed surprise.
And sorry, I'm just going to keep going with this. The euro and the yen both traded lower this week, I think.
Yeah, interestingly enough, there's kind of a split in the currency markets. The euro and the yen both surged higher when the Fed surprised the markets, and they pretty much hung on to those gains. Did trade a little bit lower during the course of the week, but yesterday we closed pretty much right where we were on Thursday of the previous week. But then some of the other currencies, the Canadian dollar in particular, because that's important to us here, Canadian surged to a 3-month high of 98 cents on the Fed surprise, but it's definitely traded off from there. We're at least a penny below those levels here at yesterday's close.
Let me just throw a couple. I just want to get to the bond market here.
Yeah, the bond market, it was the winner, I'd say, of everything. I listened very closely to Mark this morning. I read his letter every day, and the bonds had been climbing prior to the Fed surprise, and then just really jumped on the Fed's surprise announcement, and they've kept going up since then. So while other markets had a jump higher on the Fed surprise and then maybe backed off or stayed about the same, the bonds have continued to rally.
Now, have you seen, as I say, I was looking earlier this week at the trend line, and has it broken anything major for you, or are you still thinking of it in a trading range for interest rates and bonds?
Well, I remember in May, I had been down at a conference in California, John Molden's conference, and I'd heard David Rosenberg say, I've ended my 25-year love affair with the bonds. Since May right through to August, the bonds just got clobbered. They really did. So, there was a thought at the August lows that the bonds were probably due for some short covering. I heard Mark reference that. We've definitely got that. And then they've got an additional boost over and above short covering. It's so key here on what your time frame is. I did not take a position in bonds because I had kind of mixed signals on bonds. On the one hand, it looked like they could rally on some short covering. But I've got a view that, as we go into next year, we could see interest rates much higher than where they are now. So I did not want to be a buyer of bonds. So I like I said, conflicting signals. The safer trade, the easier trade for me was to short gold.
To short gold. And now, you still have that position on?
No, I don't. And this is, I said last week as a cautionary note, sometimes I think some of the short-term things I talk about with the trading I do might not do our listeners any benefit, but I saw that gold has been in a downtrend, whether you look at the last 3 weeks, the last year, last 2 years. So gold was easier to short than stocks, which have been in an uptrend. I took a short position on gold. I thought that if the gold market took out the lows that we made last week, in other words, the lows before the Fed surprise, that it could really be Katie bar the door on gold. We could run it down to easily the lows we saw at the end of June. We had a big drop, as I mentioned just a moment ago. Gold dropped as much as $70, but we didn't take out the lows. And I thought, they had a great chance to take out the lows. Didn't happen. I think I'll just move to the sidelines. I made a nice little trading profit on it, and now I'm back in cash, sitting on the sidelines, waiting for the market to set up another opportunity for me to do something.
And a reminder to people, you can go to www.victoradair.com. He's got some great charts up this week. VictorAdair.com kind of gives some background to what he's looking at. Also, Victor will be with me October 27th in Calgary. Victor, thanks very much.
Hey, you're welcome, Mike. Talk to you next week.
Time for this week's Goofy Award. I'm talking global warming. Hey, from what I've been told, this is the most serious issue facing mankind. Well, the caliber of discussion has been decidedly not serious. There's so many examples of hypocrisy. I mean, think Al Gore, the myriad of Hollywood celebrities who fly around in private jets, have big houses, multiple cars, and of course don't use public transportation. Rather than on focus, for example, on the U.S. coal industry, which produces 50 times the emission of Alberta oil sands, those celebrity activists like to come against the Canadian oil industry. If you want unserious, think of the ridiculous cataclysmic claims. I mean, I can't look at a report by the IPC without thinking of their proclamation last time that glaciers in the Himalayas would melt by 2035, only to find out the source wasn't scientific research, but a world wildlife brochure. Think of the people who don't know the difference between daily weather and climate. Think of the climate models, been dead wrong for 15 years. Sadly, I think of some members of the media who insisted the science was settled, and instead of inviting discussion and debate, they squelched it. I mean, the list just goes on. And finally, think of those that insisted on scientific certainty. And yet we don't understand that the IPCC report that came out yesterday allowed political hacks to completely doctor the work of scientists in the summary for policymakers. These are the people who have resulted in climate change way down the public's agenda. They are more than goofy. They are self-righteous and smug. Their legacy is reflected in the polls that show that global warming barely rates a mention in the public list of concerns. In the U.S. election last year, it ranked dead last in a list of 20. They have done more to discredit global warming than any of the so-called deniers. And for that, they get my goofy. Thanks for listening. Have a good weekend.